Hello again, fellow BeachBum traders. We hope that you had a great trading week last week. We hope that you found our weekly game plan from last week helpful to you in your trading. Please let us know if you found our weekly game plan from last week helpful to you in the comments below. And please let us know how your trading went this week. Good or bad, what did you learn? How can we improve our weekly game plans to help you succeed in your trading? Now let's get started preparing our game plan for next week. So what is the January effect? I'll put a link to this article from Investopedia in the description box below. And we can see that the January effect is a perceived seasonal increase in stock prices during the month of January. You can see analysts generally attribute this rally to an increase of buying, which follows the drop in December when investors engage in tax loss harvesting. And we've talked about in the past couple weeks tax loss selling going on in December, talked about the wash sale rule. And we can see that selling tends to bring prices down and spur buying in January. So another possible explanation we can see is investors using year-end cash bonuses, and we see some key takeaways. It's again a perceived seasonal tendency for stocks to rise in January. It's been pretty reliable, 29 out of 30 years. It's been an average yearly advance of 20%. It's theorized to occur when investors sell winners to take capital gains at the end of the year, and then buy weaker performers again, sell the overperformers from 1 year to buy underperformers from that year going into the next year and try to outperform the market indexes going into the next year. Again, we've talked about this for several weeks, been preparing for it. The Santa Rally, preparing for the Santa Rally, preparing for tax loss selling trend, and now we're talking about how can we make money from the January effect. So again, it's a perception, no guarantee, but historically we've seen an increase in January. And then you can read more detail, the explanations. Again, we've talked about tax loss selling, profit taking at the end of December, dropping prices, and people turning around. But again, they have to wait 30 days for the for the wash sale. So sometime in January, people may buy back those stocks that they sold off to take the tax write-off in December of that year. They'll buy back in January, and then that will cause upward pressure on those stocks. So that's what the January effect is. We can see how that plays out in a minute. Okay, if we want to see how January compares to other months of the year in terms of the returns in the stock market, we can look at this article, When's the Best Month to Buy Stocks. I'll put a link to this Investopedia article also in the description box below. And we can see that in terms of average monthly S&P gains, January on average historically returns 10%. And then we can see there tends to be a drop-off. February is still positive, but much less than January. So January, the January effect, historically returns 10%. February is down, and then we can see March, April tend to be good months as well. In details, we just talked about the January effect, beginning of the new year. We could see they're specifically pointing out that this is particularly good for small caps and value stocks. So again, that's something we've been talking about for a little while, is preparing our shopping list for the Santa Rally, looking at value in particular. And again, we can see that the January effect has a tendency to be particularly good for small cap and value. So Small cap value stocks would seem to be a good bet for taking advantage, making money from the January effect. So we will be looking for things in that category again to make money from the January effect. Then you can see some discussion about the January effect. We can see the Santa Claus Rally, accuracy, January, first day, first week, full month, 60% of the time there was a positive return based on the Santa Claus Rally and then the January effect. So again, you see a discussion that end of December is a good time to buy small caps or value, or the combination there would seem to be even better, as they're poised to rise early into January. So again, this is something that we're trying to prepare for. Let's make money from the January effect, and we will see how can we do that further in a few minutes.
Okay, I'm on the home page of FinViz, and you can find our affiliate link to FinViz in the description box below. And just to start off the new year, I want to also add a little further explanation about our approach to preparing these weekly game plans. This is part one, so we're going to look at what happened in the market last week, what are some of the upcoming events. So what were the events from last week that impacted the markets? What are the upcoming events that are going to impact the markets for the next week, for which we're preparing our game plan? What are some of the themes and trends that we see going on? And then, how can we best prepare to take advantage of those trends, both in the near term and in the longer term? The other factor of our approach is I like to take a top-down approach. You'll hear some other people that also take a similar approach, like Money Mitch from Benzinga seems to share the same approach, and I like that approach. So we're going to take a top-down, market level, indices, sectors, etc., and provide you with all that information in part one, so that you can then select the stocks to put on your watch list to watch for trading in the week to come, which we will talk about tomorrow in part two. So if we get started, again, I'm on the homepage of FinViz, and you can see our affiliate link to FinViz in the description box below. And just an aside, if you would like to see some changes to this approach for 2022, we're more than open to that. We can make a resolution to make it more beneficial for you, so please put that in the comments below, or discuss it in our Facebook group, etc. And we'll talk about some new changes also coming in 2022 that we hope you'll be excited about, other ways that we can interact more directly together. So I hope this all helps. So if we look at the indices on Friday the 31st, we can see they declined slightly and kind of dropped at the end of the day. This decline on the last trading day of the year is not unexpected. It's very typical. The last trading day of the year is often a down day. We often see these severe downward spikes, or sometimes there's an upward spike at the end of the day. Again, very, very common to see that. So we can see, and we'll see this again in Webull in a minute, the advancers and decliners pretty balanced. A few more new highs. We still have more below than above the 50 SMA and below the 200 SMA. So underneath the current, underneath the covers, there's still some downsides. Stocks are still down a bit from their averages. We see in the heat map, most things were down. Tech, etc., was down on that last day, which was a reversal from the past couple days. If we go down to the bottom of the home page of FinViz, I think this is very useful. You can see the current news. We can see reflation, global markets. We're going to see a lot of predictions for next year, and we'll share those as we think that they're of benefit to y'all. We see a lot of highs. It was generally a good year for the markets. And we can see oil is coming down a little bit. Nat gas, we'll talk about the nice rise in that gas recently and how it's been bouncing around and has a gap to fill. Well, again, we'll look at that in the futures and we'll talk about that more in new detail. Gold finally broke out of 1800, went up to 1830. Now it's trying to break out further. And then we see the indices, the futures are down a little bit. We see the Treasury, the 30-year, got up in the 1.9s. I don't think it ever broke 2, but we would expect due to the target inflation from the Fed that it should approach 2. We can see the 10 years at 151, so it's kind of in the middle, and again, we'll see that in the futures. So let's dig more into, how was last week? How did we do in terms of a Santa Rally, which, just a reminder, and we'll see that in a minute, is still ongoing through the first 2 trading days of next week. So we're still in the Santa Rally. The conclusion still out is how successful the Santa Rally will be this year, but we'll take a look and talk about it. So I hope this helps. Okay, let's quickly look at each of the major indices. Let's look at the SPY, which is the S&P 500, the major index for the S&P 500. See how it ended the week. We can see we had a nice run up, kind of topped out. We can see it's kind of at the top of the trend line for that upward channel, and then turned down a bit on the last day. Kind of not unexpected again. It's hitting the top of its channel and turned down a bit. Let's look at the Qs for the Nasdaq. QQQ is the major index for the Nasdaq. So again, we see the run up, peak, a little bit of a turn down again. Tech had a little bit of a downturn towards the end of the week, so we see a little bit of a downturn, but it did break out of that descending channel, and now it's hovering above its averages above that channel. So we'll have to see what direction the Nasdaq takes. The Dow, DIA, which is the index for the Dow. Again, we see that run up, broke out of the descending channel, peak, turned down at the end of the week, and again, it's indeterminate. Is it going to turn back up, or is it going to come back down into this channel? So we'll have to look. Again, the first 2 days of next week are still considered part of the Santa Rally. Again, I'm not interested right now in trying to short any of the indices until we get out of the Santa Rally, and then we'll take a look at it and see if we're going to get an extension up, continue in the upward channel. Where are the indices in the channel? And do we want to try to short the indices back down, or are they going to extend upward in the near term? So the IWM is the major index on the Russell 2000. We can see again it had a nice run up, peak, kind of went flat. It's still below its average, has quite a bit of upside. We saw in the January effect that in the Investopedia article that it tends to favor small cap value. And so, this may be something we want to watch. If you want to play the index, you might want to watch the IWM for the Russell 2000. Now, granted, that's a very broad range of small caps, but we may see some upside in the Russell due to the January effect. So we're not going to go long the Russell because it's sitting in the middle of its channel, but it may be something worth watching to see if it starts to make a run. Again, if you want to play the Russell, the index using IWM for that run up, that's an option. Take a quick look at the VIX. We can see it's been reverting. It's pretty much steadily declining, reverting. We are very interested in this reversion. It did not settle down below 1600 or 16. It's sitting at 1722 right now. If it continues to revert and gets down to this 16 level, we would look to go long the VIX using UVXY. We do not see any immediate events that would cause a spike in the VIX. It would have to be just a black swan event that we can't foresee coming in advance that would cause this spike at this point. So we expect a retracement. When it gets down to this 16-ish level, we're looking to go long the VIX again with UVXY. So that's a look at the indices. Then next we'll look at the sectors, the groups, see how those did, see what sectors we might want to take a preference in, long or short, for next week. Okay, again, taking our top-down approach, looking at the market's performance from last week. I'm on the Groups tab in FinViz. It's another nice feature of FinViz. You just select the Groups tab and we can see the relative performance of all the major sectors, all the major groups within the market. We can see on Friday the 31st things like consumer, defensive, basic materials. Again, it was a more of a downturn day. We got risk off. Those types of sectors tend to outperform. We saw communications and technologies were the worst performers. Again, on a risk off day, it was kind of a lockdown day. There was news on the cruise lines going to level 4 from the CDC. So again, it's kind of a lockdown day. You've seen our list of the seesaw from lockdown to reopening and what tends to go up, down on a lockdown day. Again, you can find that still in our Facebook group and on some of our old previous weekly game plans. So when you see a lockdown day, you know, there's a list to play versus a reopening day, there's a list to play. So for the week, for the Santa Rally, at least the beginning of the Santa Rally week, we can see we had a nice Santa Rally. Almost all of the sectors were up. Looks like an average of between 1% to 2% or so. The defensive areas were down a little less. The only one that was down this week was communication services, and that's been hammered for the near term. We see December's been a good month in general, so we hope you did well in December. Again, we hope our game plans help, and we can see, you know, the markets are up. So the yearly performance, we could see everything was pretty much up, 20%. Most things were up almost 20%. So it was a great year, 2021. Again, we hope you had a great year. We can see everything, is kind of headed up. The Santa Rally looks good. The only area that's kind of a red flag is maybe communication services. It was down bad Friday and it was down for the week, so maybe it's not participating in the Santa Rally. Technology not as much. We can see the defensives are the ones that outperformed so far for the past week. So now let's talk about some of the events upcoming, etc. Okay, let's very quickly look at some of the economic data that we got last week, which was December 27th through the 31st. I have the economic calendar at investing.com pulled up. I will include this link in the description box below, but you can very easily get to it from investing.com. You select the news tab, economic calendar. I had to select a range to go back for this past week, or you can select this week if it's the current week. We can see just very quickly some of the economic data, and one of the nice things about this is it shows up red or green, whether it beat expectations or missed expectations. So again, Monday, not very exciting. We didn't see a whole lot. Tuesday, we can see house prices were a little above expectations. We can see this HPI composite was below expectations. Then we get to the crude oil stock. We can see the decrease in inventories was a little less than expected, and we did see a run up in oil prices. Again, they're still predicting, much higher oil prices, but it got in the mid 70s. Then we saw a trade imbalance. Again, that was worse than expected, so we still have a worse than expected trade balance. Home sales really missed, so pending home sales is much worse than expected, so that maybe the housing market is cooling off. Here's crude oil inventories again. That would beat expectations. Distillates, gasoline inventories were down more than expected. That was a positive for the price. And then we got jobless claims on Thursday, and that was kind of the big news. That initial jobless claims was lower and therefore better than expected. That was the big news. Also continuing, we can see, was better than expected. So that was the big economic impact. It caused, or it helped spur further upside in the markets, that the job market may be picking up. Then we got the producer index was a little better than expected. And then we got the natural gas storage inventory was less, it was less than expected, so positive for the price. So we did see a nice bounce in the natural gas price. So then Friday, again, we got this typical crude oil production, etc. Baker Hughes, pretty much everything was pretty much as expected. So that's the economic data from last week. Now if we go to what's upcoming for this coming week, so for the week of the 3rd through the 7th of 2022, what do we have on the slate? ISM manufacturing data, some bond data, typical, inventory type data for commodities. Got JOLTS, which is another job indicator on Tuesday that might have some impact going forward. Manufacturing, we can see we have the OPEC meeting. Okay, so here's a tentative OPEC meeting on January 4th, Tuesday. So if you're playing oil or you're interested in playing oil, we want to hear, is OPEC going to increase production? They're increasing every month, but we want to hear, do they accelerate that rate of increase, or do they decelerate that rate of increase, or does something else happen? So on Tuesday, that OPEC meeting should have a significant impact on the oil price. So listen for that. And, it may be an opportunity to play. And we got mortgages Wednesday, typical ISM, crude oil, gasoline, typical Wednesday type stuff. Thursday, imports and jobless claims, again, pretty typical. And then, again, Friday is a pretty typical day. Unemployment data at 8:30 on Friday, which is, again, typical unemployment. And if that is better than expected, then that should be positive. If that is worse than expected, we might go into a risk-off mode again going into the following week. So again, there's the economic calendar on investing.com. Easy to see not only the events, but also did they meet or miss expectations, and also what's upcoming. So I hope this all helps. Okay, let's quickly look at the Futures tab in FinViz. Again, you can go to FinViz, click Futures, click Charts. We can see what the futures of the indices look like. We can see each of the indices kind of peaked out and rolled over towards the end of the week. Pretty consistent. We can see the Russell. We can see the S&P made several new all-time highs and is floating up above. So again, we're still in the midst of the Santa rally. Normally that would look like a great opportunity to short, but I don't trust that until we get out of the Santa rally. Again, it's up to your discretion if you want to try that. But once we get out of the Santa rally and we see a definite direction, then we will make a determination if we want to try to short. But normally on such an extended run up, that would look like a great short opportunity to me, but not in this Santa rally. So we're going to just watch the indices until we get out of the Santa rally. And again, with the January effect, it's again a upward effect. So we would expect the indices to keep going up. So we see the Russell's kind of flat right now, but again, the January effect says we should see some upward pressure in the Russell, hopefully. We see retracement in the VIX, as we talked about. We see crude oil did kind of roll over, but it ran up and then kind of rolled over on Friday. Again, we expect oil to go up in general, so right now it's kind of in the middle, so we don't have a play on oil until it reaches one of the extremes. So we're not looking at oil right now. We will listen to the OPEC meeting. That might have a drastic move. Natural gas is the one we've been focusing on. It had this precipitous drop, bottomed, and we've been scalping oil or scalping natural gas repeatedly using the Boyle ETF. It's a leveraged ETF on natural gas. We made nice profits on each of these scalps. Every time it kind of bottoms out, comes up, we buy, we sell, we buy, we sell, It recently, really bottomed again. We're now again long boil. We had a nice pop on Friday. One of these days, if we have a cold snap or any other event that causes inventories of natural gas to plummet, we expect this gap to fill, and that's where the big profit is going to be made. I thoroughly expect that to eventually happen, but in the meantime, we're going to keep scalping on these bumps. We see gold had a nice breakout. We'll see. I would expect from that kind of look, we'll get a minor retracement correction, and then hopefully it will leg back up to this 1860, 1880 level. Same with silver. Silver broke out. It's got a nice upside potential as well. As you probably heard, or if you're new to our channel, we're long gold and silver using a Credit Suisse monthly dividend paying ETN, GLDI on gold, SOVO on silver. We also own a number of miners that cover both gold and silver and some other minerals. So yeah, we're bullish, still long gold and silver, expecting a run up. These guys don't move fast, so it's kind of nice to hold those monthly dividend paying ETNs and collect the dividend checks while we're waiting for it to move up. So I've been looking for ways to short ETFs, leveraged ETFs, ideally to short like cattle ran up. Normally, something that's that extended looks like a short opportunity to me. I haven't found a good one yet, but I will let you all know. Similarly, that looks like a great opportunity to short if I could find a leveraged ETF, ideally leveraged ETF to short rice. A lot of these guys, when they get so extended like that, to me that looks like a great opportunity to short those commodities. But in retirement accounts, I can only short using ETFs, and most of our accounts are retirement accounts, although I do have a new cash account that I can look at shorting individual stocks. So we can also see bonds has been kind of oscillating around its midpoint. It really doesn't have a strong direction yet, so we may have to wait for the next Fed meeting or something else to cause some real further movement in the bond market. So right now we've been waiting for some kind of peak or top or bottom in bonds, and haven't got an opportunity yet. So we're looking for events there. So that's kind of what the futures are looking for, some opportunities hopefully you can see and maybe take advantage of. And now we can look at some of the market data in Webull, and we'll talk about themes, strategies, etc., and then we'll wrap up. Okay, now I'm on the Markets tab on the online browser version of Webull, and as usual you can find our affiliate link for Webull in the description box below. Get 2 or more free stocks with your version of Webull. And again, this is the browser version. I'm on the Markets tab. We see where the indices ended. Also want to mention we have a more detailed video how to use the market screen in Webull. I'll put a link to this video in the description box below. I would recommend that you see that for more detailed information. I'm going to go through this as quickly as I can. So we can see advancers decliners was pretty balanced even though the markets were down. We can see the inflows was mostly trailed off and then sharply declined at the end of the day. Again, kind of expected for the last trading day of the year. See news, not really anything notable. If we look at the quick after hours from Friday, see if we see any major trends. The gainers, we don't really see anything. Some pharmaceutical, general, again not a strong trend I don't see. If we look at after hour losers, again some biotech, therapeutics, etc., some Chinese education, again not a real strong trend there that I see. Then if we look at the best performing industries, I'm going to hit all so we can see them all together. We see some of the Chinese education was kind of running, containers, industrial was positive, home building construction was positive, oil water utilities. So some of the utilities, again, that's kind of a defensive risk-off type. Utilities tend to get some bid there. So, and then basic materials, metal mining, gold, etc. Kind of again the basic materials that we saw. So then we can go to ETFs. Go to all. We can see the direction of the indices, short the Nasdaq, short the Dow. So again, kind of expected on the down day on Friday. Down Dow, down S&P, down Nasdaq, down Russell. So on Friday they were pretty much betting, on the downturn, which is not, again, unexpected. VIX also down, so they're betting on the retracement of the VIX. So we would expect a further downside on the VIX as well. So if we look at industries, uranium is interesting. It's been oscillating. It did run up quite a bit. Now it's oscillating. Industrials, again, pretty generally positive. Again, we talked about utilities, energy, oil. Nat gas is also going to show us up. Technology was down big just Friday. Semiconductors, basic materials up. We talked about that. Defensive up. Real estate's been running up too. Energy, again, we talked about that, so that's good. Healthcare is still down, so we just really haven't seen an uptick yet in biotech and healthcare. Some people are predicting we will. We'll have to see. The indices, just FYI, for biotech is XBI and I think IBB. We didn't look at those earlier. I'm kind of waiting for some kind of upturn in biotech. It's really been beaten up this year, so which is surprising given the need for that type of technology. But again, we'll talk about that further in the future. Commodities, metals, aluminum, natural gas. Aluminum, natural gas, and then just kind of general. And then other, we'll see bonds. What do we got for bonds? Okay, so government bonds up, high yield up, so just kind of general. So that's what we see for market data. Let's talk about some themes just very quickly. So these are recurring themes. We still have hot inflation, and we still have the Fed's going to need to raise interest rates, accelerate their tapering. Now the expectation is they'll finish tapering in the March time frame. There's discussions of how fast they will start rate hikes and how large those rate hikes would be. Prediction is at least 3 in 2022. So inflation's still running hot. That's going to put a lot of pressure on the Fed. They're going to have to wrap up their tapering, so that's going to put downward pressure on the bond prices, upward pressure on the yields, etc. And then increasing interest rates. So that's a recurring, ongoing theme. Also, continuing supply chain issues. Hopefully, you also heard they're having closures again due to the pandemic in Southeast Asia in the manufacturing plants, including semiconductor plants. So now again, we're going to have a drop-off in supply coming out of Southeast Asia. And again, I expect that to continue to cause the supply chain issues to be very, I'll call it lumpy, as we're going to have undersupply, and then we'll have oversupply. We'll have backups at the ports again, because again, these supplies, it's like on the highway when you have a traffic jam for no reason other than a bunch of cars happen to be in the same place at the same time going the same speed. And that's, and then that jam, it just kind of moves. So I expect us to continue to see supply chain issues, and companies that are vulnerable to those types of supply chain issues are going to continue to have problems. So be aware of that. Take that into account in your trading. And again, we saw there's a semiconductor issue again coming out of Southeast Asia. The pandemic is, an ongoing theme. It's going to be an ongoing theme for the unknown future to come. Being we've got current variants, we've got future variants. So I fully expect there will be other variants. How severe they are, what they are, when they hit is pretty unpredictable, but I thoroughly expect there to be more. And we'll see this, I expect we'll see this continuing seesaw from reopening to lockdown based on people's reactions to the news from the current future variants. So it's all, emotion, perception, reaction. So the best thing to do is to look at the market, watch the market, see what, are we in a lockdown day? Is it, cruise lines going down, airlines going down? Or is it a reopening day? Cruise lines, travel stuff going up, and once you see which one we're in, what side of the seesaw we're in, again, you've got our list of plays, and generally that seems to play out pretty well. So particularly if you're a day trader, momentum trader, etc., short term, see what kind of day we're in, and there's your playlist, play accordingly. Tomorrow it may be completely different. So these reactions, these oscillations tend to have a shorter time frame, as people get more desensitized to the situation. So again, I hope all this information helps you. Select your stocks. We will take all this information now and go prepare our watch list for next week for the January 3rd through the 7th, 2022. Just some additional information. We have under construction a new homepage at beachbumtrading.com, bum without the U, because the other domain was already taken. But it does match our Twitter handle, so it's beachbumtrading.com, bum without the U. It's under construction, but again, just as a preview, since you're watching our game plans, since you're watching our videos, if you want to go check that out and watch us build that out, that's one of our goals for 2022 is to get our homepage built out. We are also in the process, again, this is all under construction, but we have a page now on Patreon, so if you are willing and able to help support us in our efforts to continue to produce videos, produce content to help you benefit and profit from your trading, please visit our Patreon. We have just the default levels right now. Again, it's just if you're willing and able to help support our efforts at this point, we will be adding custom content to these levels. Again, that's one of our goals for this year, is to add additional benefits to our Patreon page. We are also building out a Discord. I mentioned earlier we're going to have additional ways to interact. We can interact on our Patreon. We can interact in our new Discord. Again, this will give you access to that Discord. Again, please be aware right now that is all very much under construction, so you will see it change. There may be issues while we build that out, and we will make more formal announcements as we get those home pages and Patreon and Discord fully built out. So again, if you're willing and able to help, it's greatly appreciated. Again, please watch us on social media. I'll put all these links. There'll be our Patreon link, Twitter, Facebook. You can still talk to us as well on our Facebook group, and we encourage that. Please give us your feedback. Let us know what you think of all of this, our game plans, our pages, etc., our goals for this year. If you would like to see us do something different, something additional, please let us know. If there's any other ways we can help you succeed in your trading career this year for 2022 or going forward in the future, please let us know. A challenge I would also like to throw out, and I'll post something in our Facebook group to this effect, is, what are your resolutions for 2022 for your trading? What are your goals? What are your resolutions? What are you going to improve this year? What are you going to do different? What are you going to stop doing? What are you going to start doing? Let's talk about it in the Facebook group, etc. So what are your resolutions for your trading for 2022? And we will try to share ours as well as some of our lessons learned. So we hope this all helps. Let us know. We hope you like this. Please smash the like button so the YouTube algorithm will share this information with more traders around the world. If you're not already subscribed, we hope you'll choose to do so and smash the notify bell so you're notified when we release additional content. And share this with your fellow traders around the world. We appreciate your time. Thank you for watching to the end, and have a great trading in 2022. Happy New Year again. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye.